Hi, Traders Greg here with a market update. Okay, so it is very rare that a central bank will surprise with its rate decisions. Nowadays central banks are very transparent. They communicate policies, quite often, and when we have the rate decisions, it's pretty much a done deal and on market expectations. Yesterday, however, the RBA did surprise with its rate decision being on hold, as the market did expect a 25 basis point cut from 3.85 down to 3.6%. We heard from the head of the RBA, Michelle Bullock, in the press conference after why the RBA did not cut rates, and it is because they still want to make sure that the progress on inflation is real and that they are getting their target realised. The monthly inflation data certainly has been very positive, but the one that they focus on more is the quarterly CPI data and the trim mean, and they will get that data on July the 30th, so at the end of the month. I want to have a good look at that. If that data does come out positive, so lower, then we'll get that rate cut in August, so only like a 1 month delay. But all eyes will be on that quarterly CPI number in the next few weeks. Look, the market did have a knee-jerk reaction to that RBA decision. So we did see Aussie was trading around 65 cents. It spiked up to 65.5, so about half a cent immediately. Saw the ASX sell off about 30-40 points. But neither market did go on with any of those moves. For the simple fact is that again, the market sort of expects that this is literally just like a 1 month delay for this rate cut. Okay, today we do have another central bank meeting here locally. That's in New Zealand, so the RBNZ. The RBNZ has been very active, cutting rates. They've cut rates from 5.5% all the way down to 3.25%. And the market expects the RBNZ to be on hold today, and especially I'd say after what happened with the RBA yesterday, I'd say that that's probably cemented the market's thoughts on RBNZ. But look, the terminal rate for RBNZ is probably another 1 or 2 cuts, so they are close to getting towards the finish of their easing cycle. Okay, so overnight we did have some tariff news in the US. Trump has decided to put 50% tariffs on copper imports. So copper prices exploded higher overnight. Copper prices at one stage were up almost 15%, which is the biggest one-day gain ever for copper prices. So if you were long copper, you are loving Trump. You would have made a fortune overnight. If you were short copper, I'm sure Trump is not your best friend. So certainly Trump continues to provide volatility and big market moves. Just further on the tariff front, all the countries now are getting their reciprocal tariffs, the rate that's set for them. Most of the countries obviously are getting the baseline 10% tariffs. Some of the worst offenders are getting around about 30-35% mark. 2 key takeaways for this is that the average tariff rate for countries now for the US, which previously before any of these tariffs was less than 5%, has jumped up to around 17%. And the other thing is that these reciprocal tariffs won't go live until the 1st of August, and Trump has said that, look, that's pretty much a firm date now, so no more delays, extensions, etc. So for inflation, we probably won't get a good read on what's happening with these tariffs until, obviously, with inflation, until after August, to see the exact effects of how it's going to influence that. So we have to wait a little bit longer on that front. Market-wise, look, it's a little bit quiet out there. US equities last night were pretty much flat. It is summer in the US and the northern hemisphere, so we do go into the summer doldrums. Market will really need something for it, to move it. The currencies as well, not much action there. One market that probably is worth keeping an eye on, and that's the US bond market, US 10-year yields. They have rallied 20 basis points in the last week. They're back at 4.4%. I think they went as high as about 4.43% last night. So levels that start to get concerning is if we get up to around 4.5% and above there, and that certainly is not bullish. And that's I would imagine would start to impact the market, risk off. So keep an eye on the bond market and yields, because that's one thing that certainly has had a decent, meaningful move. Other than that, good luck, and we'll with your trades. We'll catch back in with you shortly.